All right, hello everyone. It is Monday, June 26th. The time is 22:16 New York local time. Um, I wanted to make this video to say that a couple of things. So I thought that the dollar index would come up to our new week opening gap. At this point, I don't think that. We have closed below structure. At this point, I think any rally that the dollar index has back up, it is probably coming back down to these sell side inefficiencies, at least to like 102.423. Pretty confident now that we are going to see a continued move lower in the dollar index. What that means is that all of your risk assets are probably looking up. I'm currently sitting in some longs on our bearish leaders. Russell 2000 is leading to the upside. Australian dollar is leading to the upside. Silver in our metals is leading to the upside. I would expect that any movement to the upside on the dollar index now is going to get rejected, going to get sold off. Probably going to leave this new week opening gap open for Tuesday, Wednesday, at least, probably for the remainder of the week. If you look at the work that Michael Huddleston has done, Inner Circle Trader, on weekly profiles, he will tell you on his weekly models that he doesn't prefer when the low comes in on Monday. I will tell you that on our weekly time frames on all of our risk assets, kind of looking like that is going to be the case, that we are going to see a low formed on Monday, that we're looking at a risk on week. Economic data that comes out could change that, could affect things, could end up in a consolidation week. I don't see our risk assets coming back in a big bearish way at this point. You always have to watch the dollar index. The dollar index is going to constantly inform you as to what your risk assets are going to be doing. If you're day trading and you're not watching the dollar index, you need to be watching the dollar index. So with that being said, dollar index has now closed below this balanced price range that I'm highlighting with my cursor. I would expect that maybe it wants to come back up back to like 102.679 and then turn lower. So use our balanced price range as resistance, turn lower, come into some of our sell side inefficiencies, at least down to 102.421, which is our first price action on the way down. So yeah, I'm definitely expecting risk on now. Looks like it's going to be risk on. What I'm expecting. I think any move down in our risk assets is going to be bought right back up, and that's where I'm currently sitting. So we use that new week opening gap as resistance, which the dollar index has done that before. Yeah, so you can see that we have formed new week opening gaps on the dollar index and then just shot way lower. And I'm thinking that's probably what it's doing right here. Formed a new week resettlement gap on the new week, just shoot lower, come back in, fill in these sell side inefficiencies at least down to 102.416. And what that means in terms of all of our risk assets is I would be expecting a lot of green. In terms of picking your products that you want to trade, as you know, I trade intermarket relationships. I've talked about that before. You want to be looking for your bullish leaders now. So right now it's Australian dollar and it's Russell 2000. Tomorrow morning it might be different. Silver is leading in the metals. Looks like crude oil is going to want to lead us higher in the energies. I would say it looks kind of like the bonds are going to be sitting in a consolidation. If they do turn up, right now I'd be looking at the 10-year. But that is it. So look for your bullish leaders now. I think it's going to be a risk on environment in Tuesday, unless the economic data comes out and they want to use that as a smokescreen to pop us back lower. I at least think in Monday's overnight session, we're looking at risk on. I do think the dollar index here is any move up now is going to be sold off. So that is my current opinion on the dollar index. And this has been ICT tape reading practice number 9.